The question is short answer type questions and its answers. Question 1. What is meant by financial statements? Discuss the utility and significance of financial statements to various parties interested in the business concern. Here, short answer type answers. Financial statements are summarized statements of accounting data prepared at the end of the accounting process. It is a medium of communicating accounting information to the internal and external users. The financial statements include balance sheet, statement of a profit and loss, notes to accounts, and cash flow statement. Financial statements provide a summary of accounts of a business enterprise, the balance sheet reflecting the assets, liabilities and capital as on a certain date, and income statements showing the results and operations during a certain period. Financial statements are the end product of a financial accounting prepared by the accountants of a business enterprise that purport to reveal the financial position of the enterprise. The result of its recent activities and analysis of what has been done with earnings. The utility and significance of a financial statement to various parties interested in the business concern is very important. It shows the financial performance. It shows the financial performance of the company. It expresses the transactions in terms of money. It is a historical document prepared by a specific accounting period. Financial statements are significant for various parties like management, employees and trade unions, shareholders or owners or investors, potential investors, suppliers or creditors, bankers and lenders, researchers, tax authorities to know about profitability, product quality, long-term and short-term solvency of the business. Then comes your question 2. Question 2 is, financial statements reflect a combination of recorded facts, accounting conventions and personal judgments. Discuss. Here answer 2. Financial statements are recorded facts of accounting data of the business. Accounting itself records the business transactions in terms of money. The recorded financial statements are facts of the business operations and results. While writing accounts to prepare financial statements of the company, financial statements of the accounting conventions are followed to bring meaningful conclusions. This helps to maintain uniformity in maintaining accounts if compared year to year or within the industry. Personal judgments are individual opinions about the treatment of its items of expected expenses and income. These individual opinions affect the business decisions in many adverse ways. Accounts are not physical signs, hence subject to personal bias. Question 3. Explain briefly the limitations of financial statements. Answer 3. The following are the brief explanation of the limitations of financial statements. A part. Due to historical costs, the financial statements are not of much help as the information given in these statements are historical in nature. B part. Financial statements are not free from bias and affected by estimates due to concepts and conventions. C part. Due to different accounting practices, the results used to be different for the same organization. D part. Financial statements portray transactions only in monetary terms, hence ignores the qualitative elements such as quality of management, quality of staff, public relations, etc. Then E part. Different assets are shown at historical cost. Financial statements ignore price level changes or present value of the assets. Then F part. Parties interested in financial statements are large with varied interests which cannot be met it. Then fourth question. Name any three intangible assets which are amortized. Goodwill, patents and trademarks are three intangible assets which are amortized. Fifth question. Name 5 items that are shown under other expenses. The following answer 5. The following 5 items shown under other expenses are A. Carriage inwards, B. Selling and marketing expenses, C. Administrative expenses, D. Telephone expenses, E. Electricity expenses. Sixth, list the major heads of asset side of the balance sheet as per Schedule 3 Part 1 of the Companies Act 2013. Answer 6. The names of the major heads which appear in the asset part of the balance sheet are 1. Non-current assets, 2. Current assets. Question 7. State the major heads on the liability side of the balance sheet of a company as per Schedule 3 Part 1 of the Companies Act 2013. Answer 7. The names of major heads which appear in the liability side of the balance sheet of a company as per Schedule 3 Part 1 of the Companies Act 2013 are 1. Shareholders Funds, 2. Share Application Money Pending Allotment, 3. Non-current liabilities, 4. Current liabilities. Then question number 8, and state any 5 items which are shown under the head Reserves and Surplus in the balance sheet of a company as per Schedule 3 Part 1 of the Companies Act 2013. Answer 8. The following are 5 items which are shown under the head Reserves and Surplus in the balance sheet of a company as per Schedule 3 Part 1 of the Companies Act 2013 are A. Capital Reserve, 2. Securities Premium Reserve, 3. Capital Redemption Reserve, 4. Debenture Redemption Reserve and Revaluation Reserve. Question 9. Give 2 examples each of non-current assets and non-current liabilities. Plant and machinery and land and building are 2 examples of non-current assets, and debentures and bank loans are 2 examples of non-current liabilities. Question 10. List any 3 items each of the balance sheet of a company under the head current assets, current liabilities as per Schedule 3 Part 1 of the Companies Act. List of the 3 items of balance sheet of a company under the head current assets as per Schedule 3 Part 1 of the Companies Act 2013 are A. Cash and cash equivalent, B. Inventories, C. Trade receivables. Then next one is the list of the 3 items of the balance sheet of the company under the head current liabilities as per Schedule 3 Part 1 of the Companies Act 2013 are A. Short-term borrowings, B. Other current liabilities and C. Short-term provisions. Question 11. List any 3 items each of the balance sheet of a company under the head Reserves and Surplus and Current Liabilities. The answer 11. The list of the 3 items each of the balance sheet of a company under the head Reserves and Surplus. A. Capital Reserve, 2. Securities Premium Reserve and 3. Capital Redemption Reserve. And the second set is the list of 3 items each of the balance sheet of a company under the head Current Liabilities. 1. Short-term borrowings, 2. Other current liabilities, 3. Short-term provisions. Then 12 question. Name any two items that are shown under the head Other Current Liabilities and any two items that are shown under the head Other Current Assets in the balance sheet of a company as per Schedule 3 of the Companies Act 2013. Answer 12. As per Schedule 3 of the Companies Act 2013, the two items that are shown under the head Other Current Assets in the balance sheet of a company are A. Prepaid Insurance, B. Accrued Incomes, and second one is two items that are shown under the head Other Current Liabilities in the balance sheet of a company are A. Unpaid Dividend, B. Interest on calls in advance. Then 13. Answer 13. Question 13 is explain short-term investments and why they are shown as current assets. Answer 13. Short-term investments are those investments which are held to be converted into cash within a very short period, is for example within 12 months from the date of a purchase of investment. Due to high liquidity, these are shown as current assets. Question 14. List 5 items that are included in inventories. The following, answer 14, the following 5 items included in inventories are A. Raw materials, B. Work in progress, C. Finished goods, D. Stores and spares, and E. Loose tools. Question 15. List 3 items that are shown under Other Current Assets. Answer 15. The following 3 items shown under Other Current Assets are A. Prepaid Expenses, B. Dividend Receivable, and C. Advances taxes. It is not advances taxes, it is advance taxes. Then question 16. List the major heads of statement of profit and loss shown as income and expenses. Answer 16. The major heads of income of a profit statement, heads of statement of profit and loss shown as income and expenses are A. Revenue from operations, B. Other income, C. Expenses. Question 17. State any two items that are classified or shown as revenue from operations in case of a non-financial companies. Answer 17. Sale of goods and fees received for services rendered are two items that are classified or shown as revenue from operations in the case of non-financial companies. 18. The question is state any two items that are classified or shown as revenue from operations in case of financial companies. Answer 18. Interest received and dividend received are two items classified or shown as revenue from operations in the case of a financial companies. Answer 18. This is list 3 items that are shown as other income in case of a non-financial companies. That is answer 18. 19. Interest received, dividend received, and share transfer fees received are 3 items classified or shown as revenue from operations in case of a non-financial companies. Then question 20. Name 3 items that are shown under employees benefit expenses. Answer 20. The 3 items shown under employee benefit expenses are A. Wages, B. Salaries, C. Employee welfare expenses. And the last question, question 21. Name 3 items that are shown under finance costs. Answer 21. The 3 items shown under finance costs are A. Interest paid on borrowings, B. Discount on issue of debentures, C. Premium paid on redemption of debentures. This is the final answer.